Ladies and gentlemen, good day and welcome to the Q2 FY2025 earnings conference call of Techno Electric and Engineering Company Limited, hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involves risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projection, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Suraj Sonulkar from Asian Market Securities. Thank you, and over to you, sir.
Thank you, Jacob. Good afternoon, everyone. On behalf of Asian Market Security, we welcome you all to Q2 FY25 earnings conference call of Techno Electric and Engineering Company Limited. We pleased to have with us Mr. P.P. Gupta ji, Managing Director, and Mr. Ankit Saraiya, Director, representing the company. Now I request Sri Gupta ji to take us through an overview of a company's quarterly results, and then we shall begin with the Q&A session. Over to you, Gupta ji.
Thank you, dear. Very good afternoon and to all of you, and I welcome everyone to discuss our financial results for the quarter, Q2 and half year ended 30th September 2024. Anything said on this call which reflects our outlook for the future or that could be construed as a forward-looking statement must be viewed in conjunction with the risk that the industry and the company faces. Let me first highlight our performance. The results of the company are not comparable on quarter-on-quarter basis due to the very nature of the business, and we have maintained this in our earlier calls also. As earlier discussed, the H1 generally contributes 40% of the full year, and balance 60% is in H2. In this respect, we are short by around 100 crores in H1. That is about 40% of 2,500 crore, the target for this year. This is basically due to the delay in handing over of sites by various clients like Power Grid, InGrid, Parva or Adani. But out of this now we have already received 4 sites from Adani and Power Grid, and we are confident to make it up with H2 as we have a robust order book and clear visibility of additional opportunities in the T&D sector. We would like to highlight that the average order value now is almost doubled in recent times. So though the total order value may seem high, but number of sites are more or less same or less. At the same time, the speed of executing these projects is becoming a norm or requirement of most of our customers. They want to make up for the lost time in acquiring the land parcels and handing over to us for deployment of the solutions. The most interesting recent experience in H1 is relates to Seeker Power Grid, where the site was handed over to us after a delay of almost 2 years. And we were asked to complete the project in 9 months as against a execution time as per contract of 19 months. And I am happy to say that we are successful in doing it, and Power Grid acknowledges this achievement, first time in the country of this scale and size of project being deployed in such a coordinated and integrated manner. So Techno have a proven track record and competent to do faster things. So speed is going to be the way of deploying these solutions in future. You are all aware that we are now we have been deploying a 40 megawatt data center at Chennai. The phase 1 of this data center is nearing completion, and asset is still in implementation stage. It has not achieved the revenue accretive phase, but is definitely extremely value accretive. There is a good interest from the foreign entities to be part of this project. In the consolidated results, we knock off the financials of the SPV of the data center. So that is the difference between the standalone and consolidated results. Of course, this won't be a requirement once it becomes revenue accretive. In brief, the first half of financial year 25, our revenue has been around 914 CR. The EBITDA is about 126.13 CR. The other income is at 62 CR. The profit before tax stands at 180 CR. And profit after tax is at 145 crore, which implies compared to 125 crore of the previous year, it is 16.5% up over the last year, and EPS is at 17.16, which is up by about 50%. Now coming to Q2 of financial year, our revenue is at 495 CR, and EBITDA is at around 65 CR. The EBITDA margin is at 13.26%. The other income is at 28.3 CR. The profit before tax is under 4.28, and company has successfully collected all the outstanding as per our books from Techno. That's a major achievement in this H1. The PAT for the quarter is at 90 crore, about 27% up year on year, and EPS is at 7.88, up by about 19% year on year. The current investment and cash is at around 2,600 crore, which is about 225 rupees per share. We have a extremely robust order book of around 9,725 crore as of September 2024. We have further booked business. We have booked business worth 642 crore in Q2 and another business of around 1,100 crore post September till date. And thus we can say that we have a current order book of around 10,800 crore plus unexecuted. We are L1 in another 622 crore order, out of which both are very short. Additionally, I would like to say that in Q1, where we were L1, all opportunities in L1 stage stands converted into orders successfully. We have various bids in pipeline and are confident to get additional orders for around 1,500 crore in the current financial year. This will take our total order tally in the current financial year to around 4,000 CR. This simply reflects post-order execution for the current year. We will still have enough orders in hand to keep the growth momentum going. The company has successfully raised capital or completed QIP for 1,250 CR in the first half of the current financial year. Now, coming to the outlook, we have been able to tide over most of our difficulties as witnessed up till the close of the financial year 22-23. We saw some growth momentum in the year 23-24, and the same will continue for next 3 years as we foresee. We expect larger business out of transmission, basically high-end power solution deployment, data centers, hyperscale and edge data centers or distributed data center, AMI segment, and also somewhat on the digitization solutions in the power distribution space under RDSL scheme, and also our muted presence in the AMI scheme. The present, after witnessing negligible or nil growth on energy demand for last 8 years, first time in last year we experienced growth in energy by almost touching to double digit. The present peak load demand is about 240 gigawatt or more, and this is likely to be 400 gigawatt by 2030, thereby employing a per capita consumption of no less than 1,700 units by 2030 as against 1,200 units today. To meet this demand, the government is concerned and the power plant capacity is planned to be enhanced by 80 gigawatt in the conventional power space by deploying ultra supercritical power stations along with renewable energy deployment to the extent of 500 gigawatt by 2030. All these mean that the sector is transforming technologically and also deploying high-end power generation and power transmission solutions, and all solutions like supercritical power plant, 765 kV AIS, GIS transmission solutions of gigawatt scale, STATCOM solutions, VSC, HVDC solutions backed by BESS or PSO facilities, where your company has a larger presence than any other entity in the marketplace. Your company is usually focused on the areas like transmission solutions, particularly high-end DHV solutions, including STATCOMs and VSC, HVDC solutions. We are also present in the hyperscale edge data centers. We are present in FGD. We are doing smart metering implementation for 2.5 million meters. We are doing digitization of the power distribution networks of the DISCOMs in their command areas. All these verticals are of potentiality, and this implies a paradigm shift in the positioning of the company. From the current mix of 43% of the total installed capacity, the renewable energy is expected to be around 64% by 2030 due to its significant growth rate of around 15 to 20% CAGR as against 4% of fossil fuel. India aims to expand its renewable energy portfolio beyond 500 gigawatt, and the target of 2030 is more or less is stand achieved to my view. And the matching transmission infrastructure will be required, which is almost 4x as against 1x of the conventional power. So this will continue to give boost to the renewable power. As per CA report, the transmission system required for 500 gigawatt RE capacity will require no less than 50,000 circuit kilometer of lines and another 435 GB of transforming capacity. With the implementation of these programs under ISTS regimes, the inter-regional transfer capacity will improve to 150 gigawatt. The National Electricity Plan has already estimated the investment opportunity of more than 9 lakh crore in this space by 2032. The power grid will be the largest beneficiary, and we being one of the largest solution deployed at station level for last 35 years successfully since its incorporation. The and with the planned capex of 1.75 lakh crore up to 2030, their annual capex will increase to 25,000 crore by 26 from the existing 15,000 crore a year. This makes us optimistic pick up in power grid, as well as we expect larger inflow of orders from private players in this space, while we'll also be seeking some opportunities in TBCB space to ourselves. Apart from this, we are now seeing a huge opportunity in STATCOM projects to be deployed. Power Grid has already amended the qualification, and we are now qualified as a sole bidder, backed up by the support from the critical equipment suppliers. The data centers will also create huge additional demand for power. And as mentioned earlier, to meet this increased demand, the government mentioned already to enhance it by conventional power as well as renewable power. In the conventional power, again, there will be a good scope for us on the balance of plant and particularly on the power evacuation facilities, what we call step-up facilities, and grid integration for the utilities, particularly NTPC will be one of the key beneficiaries other than other CPSUs in this space. On the distribution side, in RDSS plan, we see a lot of activities happening, including deployment of smart metering. We are also deploying now about 2.5 million smart meters per year, 2.5 million smart meters over next 2 years. This year we will deploy about 500,000 and another million each over next 2 years. The counterparty risk being a bit higher compared to transmission, we are conservative with this space. We see slowdown in FGD segment, particularly after NITI Aayog report, but the orders in hand will continue to be executed at the given pace. Some business to maybe to the extent of 5 to 10 gigawatt per year from private players as well as SCBs will continue to be in this space. In the transmission segment, I have already highlighted that around 50 to 100 gigawatt of bidding is happening, and almost 4 to 5 concessions are being finalized every month and awarded to Power Grid or to private players. This means almost around 40,000 CR business, and out of which we will be expecting business worth 2,500 crore per year over next 3 to 4 years. We currently have orders worth 6,500 crore in this space, and we are L1 in another 650 crore segment, for which Power Grid has already won the concession. So this will materialize in this quarter into the order. Our projects, one in TBCB at Gogabuk and Bokajan, with a total revenue visibility of 2,800 CR over the concession period, are under execution, and we are confident to achieve it ahead of the schedules. Similarly, our the smart meter deployment is going on as per the program. In the smart metering space, we expect business worth about 1,000 CR per year for deploying about 1 million meters per year. As mentioned, we have orders worth about for 2.5 million meters worth about 2,500 crores. Ankit, will you like to highlight data centers?
Yes, sure. So, coming to data centers, I believe that digitization, adoption of cloud services, and AI, and implementation of 5G in tier 2, tier 3 cities, apart from tier 1 cities, governments focus on data protection and ensuring that the data of the country resides in the country. All of these are leading to more and more demand for data centers. They are the warehouse where the data is stored. If today the market size of data centers in 2024 is close to about, I would say, 1,300 to 1,400 megawatt, then we can expect a growth rate of 15 to 18% year on year, and we should have a total capacity of roughly about 4,000 megawatt or 5,000 megawatt by 2029. Apart coming to our initiatives, as we've spoken earlier, we've already started our construction in Chennai. It is in very advanced stages, and we started commissioning activities on the ground. We are hopeful that in another couple of months' time, the data center would be ready for RFS, for service. Apart from that, on hyperscale data center side, we've already been allotted a land in Calcutta by the state of West Bengal through their body called West Bengal HIDCO. It's a 4-acre land parcel in prime location named as Bengal Silicon Valley. We should be coming up with a data center from next year onwards. We should begin the construction activity somewhere around mid next year or towards the second half of next year, and possibly complete the construction by mid of 2027. This would be roughly about 15 to 18 megawatt data center. Apart from that, we are executing edge data centers in strategic partnership with RailTel, Navratna PSU. We've already started construction of our first location is at Gurgaon. It's at Sector 44. We're expecting handing over of a second location from RailTel in Mumbai, right across the very well-known St. Regis Hotel at Mahalakshmi. The size of these locations, the one in Gurgaon is a smaller project of 20 racks, totaling to 200 kilowatt, and this would be expanded to close to about 1.5 to 2 megawatt over time. The one in Mahalakshmi is starting at a capacity of 560 kilowatt with 56 racks, and that should also see a daylight of about 1.5 to 2 megawatt over a period of time. We've seen good traction of customers for edge data centers. In Gurgaon, we are close to finalizing a few customers, accommodating them within these 20 racks. We are seeing interest from hyperscalers as well to lease out these edge data centers in selective cities, and we are working closely with a couple of such hyperscalers to deliver to their requirement. So all in all, it looks exciting and I would say promising time and space for this industry.
Yeah.
Yeah, so that's on data center.
Yeah, coming back to the now taking over from what Ankit have said, overall in last 5 years the company has successfully monetized its all deployed assets over 10-15 years, worth about 5,000 CR in triple P model or TPCB mode. This resulted in a cash surplus which is already discussed, and QIP has further added to the cash balance. We have sufficient financial resources to see this growth in data centers and in transmission space. During the last year, as I had mentioned, I will again like to repeat that It is just the morning has happened, and this is the first sunshine, which will keep brightening with every passing year. We are confident to achieve, as I repeat again, 2,500 CR plus minus during the current year, and a similar growth over next year, maybe around 3,500 CR. We are confident to have EPS of about 35 or more this year, and 50 plus for the next year ending March 26. With this, we can take up the questions now. Hello?
Should we begin with the question and answer session?
Yeah, absolutely.
Sure. Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhijit from ICICI Securities. Please go ahead.
Thank you for the opportunity. Sir, my first question is on the revenue. So in the first half, we've done about 913 crores, and we are guiding for about 2,500 crores for the full year. So that means we'll have to grow at about 2x of last year's second half in 2H FY25 to meet that kind of revenue. And which also would mean about 800 crores of run rate from 500 crore in this quarter. So what will drive this kind of execution jump in the next two quarters? That is my first question.
May I answer, or you would like to put your question too also?
So second question is on the order book. So we have about 9,700 crores of orders. Is there some slow-moving orders in this order book? And if yes, what is the quantum of those orders?
Yeah. Firstly, you see, I said H1 we suffered because land parcels were not available from the customers who placed orders on us for deployment of stations. We have received now 4 land parcels, 3 from Power-Grid and 1 from Adani. We are still awaiting 2 more land parcels from Aparva and InGrid, which is expected shortly. But now with the land parcels being available, the execution pace will be much faster. And as I shared with you, that is the requirement of the customer also, that they want us to complete the job in no more than 6 to 9 months, which earlier used to happen over 12 to 18 months, by and large. So with this, we are confident that this weather is good. Generally, H2 is a better weather to work in this country from the field point of view, from the factory point of view. And Q4 is always larger than the Q3. So generally, our takeaway is that the Q3 is about 22 to 25%, and Q4 is always about 30-35%. So we are very sure, given a margin of 5%, we should be able to hit the bullseye. Number one. Number two, out of the order book, there is no slow-moving order books as of today with us. Because all these DBCP projects have a COD date with the customer, and whatever delay happens in giving us the inputs or land parcels, they ultimately want us to squeeze the execution.
Right, sir. Sir, and lastly on the margin. So this quarter, on a Y&Y basis, there is about 160 basis compression on the EBITDA level. And we have seen an increase in the cost of services and raw materials. So if you could particularly highlight what is causing to this kind of cost inflation, which is faster than the revenue growth, and what kind of margin do we expect in the second half?
You see, The problem here, as I mentioned earlier also, I repeat again, measuring margins quarter on quarter in a construction or project business is extremely difficult. This depends on how you book your revenue, how you book your costs. You are a bit conservative, realistic, optimistic. Many a times, we miss to book the revenue because bill have not happened, or work has not been measured, or materials have not been cleared despite supplied. So we also know over the year you always have a time to catch up. So you will find that overall margin, as I have stated, will be almost around 30 to 14% over the year. In some quarter it may be 1% more, in another quarter it may be 1% lower. But at the end of the year you will see that it is all neutralized.
All right. So lastly, what is the status of our Chennai data center, and when do we expect commercial completion for the same?
Ankit, will you like to answer?
Yes, as I mentioned on the remarks, in the opening remarks, that we are already started the commissioning activities for the data center, and we should be able to achieve an RFS, which is the commissioning when the customers we can start handing over the location to customers for moving in. Should be somewhere around January.
All right. Thank you, sir. I'll come back in queue.
Thank you. The next question is from the line of Anurag Agarwal from Multify Wealth. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, I wanted to ask more about the smart meter deployment. How do you see that faring up? Are there any execution risks which are playing out?
The answer is yes and no both. There is no basic, but nothing new is happening, I can say that, Anurag. It was known while booking the business and today also. Because the counterpart is DISCOM, so some interruption is a natural way of doing this work. But Techno is very experienced in deploying these solutions. So this year, that's why, and we have a kind of, I'd say, muted presence also in this segment against other players. We don't want to do more than 1 million meter a year, as I shared with you, with 500,000 this year, as DDF creation by the utilities were delayed, which happened only in Q2 with us at Tripura or at Jharkhand or with even the J&K, I will say. So, by and large, we will not like to be very, very aggressive and optimistic like other players in this space. But our major effort space will always be transmission, ISTS, and CPS used in power generation, I will say. Or data centers is now very, very exciting and fascinating place for us. But yes, smart meter will have our presence. Or with our known customers, we don't want to be out of it. And secondly, let me tell you, you see the smart meter are yet not declared a infra business by the government. So many InvITs are not part of it. You cannot part of your assets to InvIT or similarly to many government funds till this status is granted to this space like transmission or power generation. They are not alike on regulatory framework. So some issues are there in this space, but still some companies are more optimistic than us. We are not.
Got it. Thank you for the detailed answer, sir.
Thank you. The next question is from the line of Nivi Shah from ICICI Securities. Please go ahead.
Hi, thank you so much for taking my question. Could I get a breakup of the order book either now or at the end of Q2 between generation, transmission, distribution, and data center?
Yeah, ma'am, it is mostly out of the transmission, I will say. And the total order book breakup, if you want to know, you can. The transmission is about 4671 crore. Out of our own TBCB assets is about 687 crore. FGD is about 1,200 crores. Digitization of distribution network for DVC is about 290 crore. And smart meter is 2,500 crore.
Okay.
And another data center you can take about another 100 crore is left.
All right. Okay. Thank you so much.
Thank you. The next question is from the line of CA Garvit Goyal from Invest Analytics Advisors LLP. Please go ahead.
Hi, am I audible, sir?
Yes.
So my question is on the guidance part only, but firstly I want to understand why there is a difference between the standalone numbers and the consolidated numbers, sir. Like consolidated numbers are less than the standalone numbers. So can you please put some color on it? What is the reason for the same?
We already made in our statement that we are the company at the parent level deploying this data center in Chennai. So when you consolidate, those numbers get utilized in EPC space, but that will appear as a work in progress or as a asset in data center subsidiary when you consolidate. Only nomenclature change happens. I hope you have understood. The work executed for your own subsidiary gets utilized and reclassified as a work in progress or fixed asset or whatever nomenclature you say, depending on billing.
Understood, sir. So why giving the guidance of like 2,500 CR? So is it for consolidated numbers or the standalone numbers?
Standalone numbers.
Okay, and if we compare it with the consolidated number, so what would be that number for the full year?
You take it 2250.
2 to 5 years, yes, and we are still guiding the same number for this year, right? Despite the challenges that we are facing.
Absolutely.
Okay, sir. And so secondly, in our results also, there is a significant overdue receivables, and the auditor also highlighted the same, including those from long-standing projects, regulatory issues, and the unresolved arbitration. That is having a cumulative value of around 130 CR. So could you provide a clear update on specific challenges that we are facing while recovering these amounts, and the expected timeline for the resolutions and the potential financial impact that if these amounts are not getting collected?
No, firstly, it is not 130 CR. I don't know. It is number which we have issues are two only. One is a retention money receivable from a private player for whom we did a captive power plant, and amount involved is 11 CR only. And second is the receivable from Afghanistan, where projects were suspended due to the political change. The contract is funded by ADB. Now the ADB has already come forward and agreed to pay the dues of KEC, Kalpataru, Techno, and whoever was involved in that CASA scheme. It was called CASA scheme in Afghanistan. So bills are under process, and we expect all this money to be received. It is about $7 million. So we hope to get it before the close of this year now. So there is no other issue in our books at all.
So you're saying this amount will be there by the end of this financial year, right?
Yeah, absolutely. But compared to total receivables, it is not even 10%, so there is no material effect.
10% of what, sir? I missed that.
Pardon?
10% of total?
I could not get you. Total means?
No, 10% of what? That's why I'm asking. I couldn't hear.
Of the receivables, which is about 550-600 CR.
Okay. Good. And sir, lastly, you mentioned two land parcels we are still waiting for that, right? So is it like Q3 is also going to be in the same line, or we are going to outperform significantly? Because in order to we have to outperform significantly as compared to what we did in Q1 and Q2.
No, I also mentioned we have got 4 land parcels as against 2 not received. So 4 is good enough to make up the loss of this H1. And these 2 anyway were planned as a distributed way, you can say. It was for 25, 26 only.
Got it, sir. Got it. That's it from my side, sir. Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is on the line of Palak from MIV Investment Management. Please go ahead.
Hi, sir. So my question is regarding our FGD business. So recently we have come across an article where it was mentioned that based on the study, there was finding that the sulfur emission from the coal-based power plant is not harmful to the environment, means it's not impacting the air quality. So there has been a suggested draft that the government of India may stop the FGD tenders. And from my understanding that currently our order book is about 1,000 crores. So can you help me understand the impact of what do you think about the norms?
Ma'am, I also mentioned to you there is a slowdown in this space post study of Niti Aayog and controversy at the political level whether our AQI includes sulfur or is it harmful or not. Ramesh of Congress have said otherwise, who was earlier Environment Minister. He has questioned the present decision of the Ministry of Power. But besides that, we have existing order of 1,200 crore that will continue to be executed as per the program and which is under execution. And we are also not expecting larger business out of it, as I told you earlier also, because we don't want to take more than 1 project a year, or maybe now we can say 1 project in 2 years, maybe out of private or SCBs. Certain critical pockets closer to urban areas or semi-urban areas, they will still have to deploy as per CA report. It's not a total no, but yes, it will be project-specific requirement now. But simultaneously, report also confirms the projects which are already in execution or orders, they will be implemented as it is without any interruption. So that is the present status in this space.
Okay, so we are not expecting any significant inflow from this segment.
Absolutely. From this vertical. You are right. But this vertical is capable to do balance of plant for us in generating plants, which we earlier used to do before migrating to FGDs. So we will do mechanical auxiliaries in the balance of plant now. That capacity of the company will be redeployed in the critical ultra supercritical power plants of 80 gigawatt to be deployed by NTPC, by other state utilities or CPSUs. It's a huge business now for next 4 years.
Okay, sir. Understood. Thank you.
Thank you. The next question is from the line of Shreyansh Gathani from SG Securities. Please go ahead.
Hi, good afternoon, sir. I had a couple of questions on the data center side. So the first is, what would be the cost for per megawatt for these edge data centers? I know in the last call you mentioned that it's higher than the data centers that you would have at Chennai and Calcutta. So just wanted to understand that.
Yeah, Ankit, will you like to answer?
Yeah, so you can say it will be roughly
anywhere between 1.75 to 2 times the cost of a hyperscale data center. So one can estimate plus minus 50 lakhs, but about 8 crores per megawatt.
Got it. Okay. And for the Chennai project, what is the balance investment that we still have to do, and what have we already invested? How much have we already invested?
We've invested. Go ahead.
Yeah, we have invested about 400 CR as of today. So for phase 1, we are left to spend only about 50 CR more, plus minus.
Okay. So phase 1 is the 5 megawatt.
6 megawatt.
6. Okay, sorry. Yeah.
IT load. But if grid load, it will be 10 megawatt, like that.
Got it. So by when do we expect the full operational capacity for this center?
By March 26.
Okay. Okay. And how far are we in terms of like finalizing on customers for this data center?
Ankit, so we are in discussion with potentially, I would say, couple of customers. You see, today we are still under final construction phase and the commissioning phase. Therefore, most of these customers want to see a project completed, which we had mentioned in the last on call as well. Unless we have achieved completion, it doesn't give confidence to a customer to plan his movements because there can always be a delay in commissioning due to unforeseen circumstances. Therefore, I would say that the real hunt for customers would begin post the project is commissioned. But having said that, in meanwhile, we are in discussion with a couple of good customers. And in meanwhile, we are also in discussion with a couple of strategic partners who may potentially show interest in this project. But today our focus is largely to build our in-house sales, marketing, and operations team, because Chennai is not the end of life for us. We would like to continue being a part of this industry through edge data centers and our upcoming data center in Calcutta. Therefore, it's not that we are really scouting for a strategic partner anymore, but building a team which can sustain this business for us for long term.
Got it. Just a couple of questions if I can put in. So these edge data centers, by what's the lead time for this construction time, and when do we expect to operationalize them? From T0, for example.
So construction time literally depends on the status of many things. When we are handed over a land from RailTel, some of them are partially constructed, some of them are completely constructed, where we are only fitting out the electromechanical work. So depending on the status of that particular location, the construction period changes. It can range from anywhere between 3 months to 12 months. While we are already constructing one in Gurgaon, and that should, as I mentioned, we should commission it by mid-December, end of this month or mid-December. That will be our first edge data center going live. We should be beginning the second edge data center in Mumbai sometime around the month of January. We should be handed over that location in January because they're still clearing out that area where they're handing over us the plot. So, and we have already made a requisition of another 15 locations to begin the work. We are started to visit those locations. We are scouting for land along with RailTel, the one which is most suitable. So I would say, as per the contract, we are supposed to deliver 20 locations every year. But on practical terms, I guess we'll see real action and execution of these projects from next year onwards. While this year we should see our first one going live. in Gurgaon.
Got it. Thank you. So just last question for the Kolkata data centers. Do we expect, the same amount of investment per megawatt as the Chennai center, or is it going to be more optimized given our learnings from Chennai?
I think it will be similar, maximum of 5 to 10% savings.
Okay. All right. Thank you. That's all from my end.
Thank you. A reminder to all participants, to ask a question, you may press star and 1. The next question is from the line of Ashish Soni from Family Office. Please go ahead.
So, what are your sense in terms of ground situation, in terms of transmission project? Because we see a lot of government saying that we need to come up with a lot of schemes and IBC. But apart from this land thing, what are the other challenges you are seeing on the ground currently?
So basically, land parcels and acquiring right of way, which is often a problem. Some people object to the putting a tower foundation. Although we are not in line building, for us it is only a station which is butted and bound once land parcel is acquired and handed over to us. But the ownership is in India so fragmented in these rural places that acquiring 150 acre or 100 acre, you have to buy out from no less than 100 landholders. Doing documentation, involving commissioner level people, land revenue departments, checking their records, authenticity. So legal processes as well as information on the ownerships, willingness of the owners to part with the land parcel. All these are, still in India a bit arbitrary and challenging. Despite 164 approval of Government of India, Gazette notification, all legal empowerments are there. But our courts do not function, or bureaucratic machinery is not all that efficient. But still I will say in the world we are doing the best.
But do you think in terms of delay in executions because of all these factors, or do you think government is coming, or you guys are working with government to improve certain? Because we keep on hearing next 2 to 3 years at least there is a lot of transmission being planned. So do you see any improvement in this area in terms of government policy, state government, something of that sort?
Sir, firstly, I think we should talk when it comes to states, it is very, very state specific. But coming to ISTS region, which is a central government purview, the willingness is larger than the reality, I will say. They are all willing to improve, but there are so many government departments or government-owned ministries are involved that they are not sure of what may slip out where, at times. But nevertheless, I will say there is a lot betterment than a year back or 2 years back. In countries like Europe or US, unless the whole land parcel or right of way are in so the tender itself happens almost 2 years late. But in India, we are not waiting for all these approvals in place before tendering or carrying out the programs. So it's a kind of a hybrid situation where that the agency along with government might answer to the challenges.
Okay, sir. Thanks. Thanks for the update.
Thank you. The next question is from the line of Shekhar Singh from Builtmart. Please go ahead.
Yes, hello, sir.
Yes, sir. You can proceed with the question.
Yeah. So my question is, any guidance for fiscal year 26 and any scope of margin improvement there?
No. You see, generally these margins, because there is a lot of competition today in tariff bidding, and if post-tariff bidding there is not enough space with the asset deployer to give you a higher price to the solution. But still, I will say the beta achieved by Techno is one of the best in the industry.
Okay. Yes, sir. So, also, sir, like, could the slowdown in state government implementing in smart meters impact our targets of 1,000 crore revenue in coming years? Because they have been like pretty slow in implementing the smart meters in their respective states.
No, the smart meter, I don't think we are slow. They were delayed in creating DDF. The direct debit facility is a part of the order, which they have to do the security documentation before the scheme implementation can be taken up. Because unless you have the commitment of the state government to pay through the banking channels from the very account he is having with him on revenue collection, the scheme is not achieved the zero date. The zero date is when DDF is created. So thereafter it is going all right, to my mind, other than bit of interruption here or there. So far it is so good.
Okay, sir. So basically, so we are in our right track to achieve the revenue targets of 2028 of around 10,000 crore approximately.
Yeah, absolutely. There is no issue.
Thank you. Thank you, sir. Best of luck.
Thank you. A reminder to all participants, to ask a question, you may press star and 1. The next question is on the line of Mohit Kumar from ICICI Securities. Please go ahead.
Hi, so thanks for the opportunity. The only question I have is given the fact that there is a huge amount of bidding which happened in the last fiscal and this first half, right? So in the sense, are you seeing a lot of inquiries, opportunities, and do you think there's a fair chance that we'll update this guidance of 1,500 crore additional order inflow in the H2?
Yeah, absolutely. More than that, rather, I will say. Reality. Like I shared, out of 1,500, we are already L1 in 670 crore. And those concessions are already won by Porgit. So I think before December and those orders will be converted. So there is no doubt we may beat this number also.
But do you think it will be to be by a wide margin, given that Porgit has won roughly around 80,000 crore in the first half, 80,000 crore ITD. That's a very large amount, right?
No, we do only station work, and no other work, sir. Maybe out of 80,000 crore, the station work is no more than 4,000 CR.
4,000 CR, okay.
Yeah, we don't supply transformers, reactors. They procure directly. There are lines, there are HVDC packages. So all those are different type of solutions.
There are also there are too many STATCOM packages, right?
Yeah, STATCOM are now. They have qualified us now. So we stand qualified in our own merit and experience. So we are part of it now. KPS 1, KPS 2.
Those bids are under evaluation. Is that right?
Yet to be bidded, sir. They have issued inquiries to us now after qualification amendments.
Okay. And how many bidders are there in STATCOM? 3, 4?
There should be no more than 4.
Understood, sir. My second question is on the, given that, of course, the large amount of bidding is happening, right, which also means that we also have a fair amount of winning the new opportunities in TVCV, right? So how do you thinking about this opportunity? Are you seeing a lot of smaller opportunities where you can participate, or do you think it's only larger opportunities are coming and we are not interested in those larger opportunities?
No, larger we are definitely not interested. We don't want to be part of this aggressive tariff bidding and RS. But up to 750 CR, or maybe where station work is larger than line, we may go up to 1,000 CR. So that is our appetite, sir, as far as standalone we are concerned. But definitely now many other companies are approaching us to be part of them, like InGrid or the Parva. So we don't mind to be part of them as a risk sharing. The question is what kind of risk or appetite you have for risk in all these asset ownership, because asset ownership is not a business of Techno. Our business is EPC.
But is it possible to take a smaller share, shareholding in these SPVs and get the EPC contract? That will be beneficial for us, right?
Yeah, we have done that. We rented now in Dhule and Ishanagar. The two concessions they won. We have taken 20% stake in those SPV, and we are executing, deploying their solutions worth about 1,000 crore.
Has there any new opportunity, any new tender pipeline in the smart meter? Are you seeing that, or is it very slow right now, and most of them will get shifted to the next fiscal?
You see, in smart meter, we are not active, let me put it. If there is a good opportunity, we can get at our price and terms, it's okay. Otherwise, we believe counterparty risk is high. Having dealt with DISCOMs earlier in power agreements, renewable power, we were the first IPP country in 910 when we set up 200 megawatt and have gone through huge litigations with Tangentco to realize all our news. Because we have deep pocketed, we put the same.
The last question, the interest rates, sir. Are you seeing some movement? Are you seeing some opportunity which are coming up where you might be interested, or is it very slow?
Sir, there is no perfect answer to your question, but if there is any sweetened opportunity, we won't miss out. If it is multilaterally funded, bilaterally funded, we are always there. But if any DISCOM wants to do, or any entity of state wants to do a project out of its own resources, we will definitely not be there.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. A reminder to all participants, to ask a question, you may press star and 1. A reminder to all participants, to ask a question, you may press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. P.B. Gupta ji. Thank you, and over to you, sir.
Yeah, thank you to all of you for very active and healthy participation and for joining the conference call with us. In case you still have any query related to our performance, please drop out a mail to us, or do visit us whenever you are in this part of the country. We have equally large office in Gurgaon now, so at Motorola Excellence Center in Sector 14 of Gurgaon. You are welcome to drop in and to see us actually on the work, and I thank once again everybody for joining the conference.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.